Hey, I'm Maria Dior. I'm a real estate agent in the San Francisco Bay Area, and with me today is Will Johnson. He is a mortgage lender in California, down in San Diego, and we're going to talk about renovation loans and how it can apply to renovating your home, updating your home, or even adding an ADU to your home. So let's get started. So, Will, can you tell us what is a renovation loan?
Sure. Thank you for having me. So, renovation loans is sort of a generic term. Um, the loans are available from HUD. It's referred to as a 203K loan. There's a similar product from Fannie Mae called Homestyle. There's a VAR renovation loan that's available, and the essence of these renovation loans is it allows you to add a construction budget to a loan, whether you're refinancing, adding a construction budget, doing a room addition. That's sort of the popular one, adding a
Mm,
master suite, bigger budgets, or you can do it with a purchase. So I think this is something to be aware of if you're a home buyer. It's sort of a great opportunity because somebody can go buy a property that has conditions,
mm,
and we can add a construction budget. And I think which is very, very attractive to a lot of home buyers is you have a construction budget, and once you close escrow, you go shopping. You pick out the flooring,
yeah.
windows, appliances. I mean, think about that. You're picking out something that, to your particular taste, opposed to obviously a home seller or somebody that's flipping the property. I think that's a really appealing aspect of these loans.
Definitely, definitely. I mean, I have a situation. I think I've told you about it before. About we had a leak in our bathroom, so insurance is covering part of it. They're not going to cover all of it, but we basically have to renovate our bathrooms, and it's not a small amount.
Mm.
Especially right now in the Bay Area, construction is super expensive. And it's been something that I've been trying to get done for a year now. So I'm really interested in this because we'll probably be seeking a loan for it really soon. Um, so, how difficult is it to get a renovation loan? Is it harder than a mortgage or getting a HELOC? And why would somebody want to get a renovation loan if they already own a home versus getting the HELOC or the
Sure.
refinancing?
Well, that's we go through that assessment when somebody is looking at doing any kind of a renovation. Let's see what kind of existing equity do they have. Let's look at maybe refinancing. Let's look at HELOC. HELOCs are popular right now because it's a second and people have a low interest rate on the first.
Yeah.
But here's the key difference with the renovation loan is, so, what if you don't have equity to take advantage of a refinance or HELOC? The attractive thing about the renovation loans, which really sets it apart, is we base the overall loan on the future value of the property.
Oh, wow, that's great.
Yeah. So it ultimately gives you a larger construction budget to work with, and usually I have a high level of confidence as anytime we're adding square footage like a master suite, that I have high confidence that the appraisal will support a much larger loan amount and allow you to proceed with the construction.
So what happens at the end of the construction period? Does the loan just continue to exist or does it roll into your mortgage? Does it become a different type of loan once the construction's done?
Yeah, so it's actually one loan. All right. So you're going to get quoted a current interest rates of whatever it is. That's going to be a fixed rate loan for 30 years typically. And so that's not going to change. Um, what's part of the renovation loan is, we have to have a construction bid to review. That construction bid, once we close escrow, whether it's a purchase or a refinance, that construction budget is sitting in an escrow account, and now the construction can begin. And we release those funds based off of the progression of the project.
Okay. So it's incremental distributions to the contractor.
And that's actually a huge consumer safeguard benefit if you think about it.
Yeah.
We actually don't release any funds until work is completed. I've been managing these loans as a HUD consultant for, well, since 2009.
Mm.
And I would go out there, verify that demolition's been done. We've done 50% of the foundation, and we would go ahead and prorate and release the amounts level to the completion of work.
Okay.
And we will keep doing that until the project's complete. So think about that for a second. Is the contractor, has to work with their own capital to work with,
Mm.
and that gives a lot of safeguard to the borrower because nobody's taken off with the money, and we just have to be
That
concerned.
happens.
Yeah, it
It
happens. It's
happens.
terrible. I mean, it's
Yeah.
usually not a trivial amount,
Right.
so this is huge
I
safeguard
I
for
actually had
consumers.
it that happened to me recently. I had a
Oh
sewer
no.
line. Yeah. Well, it didn't happen to me. I sort of like, cut it off at the pass. But I had a sewer line went bad and needed to be replaced. And it was like a $12,000 project and had the plumber ready to go. And right right before we were going to start, like the day before, they wanted like 60% of the total amount up front. And it really threw up all kinds of red flags for me. And as soon as I questioned them on it, they said, you know what? We don't want this job. So
Oh
I knew right
no.
there, yeah, they just completely, and I thought that's so strange because the job is only supposed to be 2 days. You're going to start tomorrow. You'll be done the day after. I'll write you a check for the whole amount. And I was willing to give them, 20% to start off, but I wasn't going to give them the 60% that they were asking for.
Yeah.
And so that was a huge, huge, huge red flag for me. So I'm really glad. Then it made me dig deeper into their background a little bit and finding out that they had some shady
Oh
reviews and
no.
things. So yeah, no, it saved me big time. But that would have not have been an insignificant amount of money to, hand over to somebody and then never get the job done. So that is a huge, huge, huge
It's
benefit.
terrible how frequently I hear about this.
Yeah. Yeah.
It's just so this is a huge consumer benefit. The other thing that happens in this process is anytime we release funds, the contractor signs it, the borrower signs it, the consultant signs it.
Mm.
So it really shows accountability for everybody all the way around. And I tell the borrower you shouldn't be signing anything until you're comfortable with the progression that we
Yeah.
see up to this point. If not, we have to stop and fix it then and there.
And not only just for the consumer, but if you think about it, the contractor, although they're upfronting their time and their money up front, it's a safety for them too because they know 100% that the money is there and the person that they're doing the work for has the money to pay them when they invoice them.
Another benefit that may not be so obvious is when a contractor is participating in this, and you've selected a good, reputable contractor, they probably have several other jobs that they're doing at the same time, and because their money is tied up in your project, guess which one gets priority?
Yeah, well, that's true. There's not going to be any delays in this
It,
situation. That makes
it,
a lot of sense.
It,
Yeah.
it, it works. I mean, I feel the pressure for the contractor to get paid. I want to make sure the contractors get paid just to keep the project moving.
Yeah. Yeah. No, that makes a lot of sense. As far as qualifying, is there a minimum credit score that people need? Is it different than a HELOC or a mortgage, or is it more?
It's actually the same. This is pretty much, it's an FHA loan for the 203K, so it has the same kind of minimum score requirements, and the same for Fannie Mae. So it's very, very similar in terms of qualifying for a loan. The real difference is the process.
Mm.
Is borrower has to hire the contractor, vet the contractor, let the contractor know that this is a construction loan, and contract needs to be submitted. It needs to be accepted by the lender. There's a certain level of detail that that the lender wants to see. So sometimes there's some revisions because of that. But once it closes, that money sits in the escrow account. HUD wants to see all projects finished in 6 months.
Oh,
Candidly, sometimes that's not realistic depending on the scope of the project. Fannie Mae can actually go 15 months. And, we do big renovation projects. We build ADUs, and sometimes we need that kind of a period to complete the project.
yeah, I would think building an ADU is that's a whole different timeline than just remodeling a bathroom or adding a roof or something, or even a kitchen. You're adding extra plumbing, you're drawing extra utilities out, there's a bigger permit process. So yeah, it makes sense that
Yeah,
the
the
process.
delineation to me is as soon as we have to hire an architect
Yeah, yeah.
for room addition, and we have to go through the permitting process. If we're just sort of fixing in kind, 6 months is very doable or less.
Yeah. Do renovation loans have a interest rate that's higher than an average mortgage or a HELOC?
They're comparable, but they do run just a little bit higher. Sometimes they can run lower. It just sort of depends on what's going on in the marketplace. But I would say they run quarter to 3/8 of a point higher than a standard conventional loan. If we don't have 20% equity in the loan, then private mortgage insurance will kick
Okay.
in. So that could add some costs.
So what's the average length of a renovation loan? When mortgage standard, regular mortgage 30 years, usually HELOCs can be a little shorter. If the renovation loan is a separate thing from your main mortgage, what is the time period for repayment?
Yeah, as far as I know, it's 30 years. I'm not familiar with anything shorter or longer. It's a 30-year fixed
Okay.
loan.
Okay. Well, that makes sense. So it's not really a lot different as far as the monthly payment would be. It's still going to average out over 30 years. So that's good to know.
Yeah.
So when you're getting a renovation loan, how much money can somebody borrow if they're going to do a major renovation? Is it obviously the dollar amount is going to be different depending on the cost and everything, but as far as the amount of equity you have in the home, like can you go up to 100% of the after repaired value is estimated to be, or does it need to be lower and leaving some equity in?
Yeah, so there's a couple of scenarios associated with that. If we're talking Fannie Mae, it's 95%, and so we have to stay under the conforming loan limits, as a cap out there. But the real key is the appraisal process, because the appraiser is going to be tasked, what is this value of the property after all of the improvements?
And does
And
the appraiser take into consideration like what type of materials you're putting into the project? If you're just putting, vinyl flooring and lower end stuff, or any versus going with solid granite or quartz or something, do they consider those things at the beginning?
yeah, because actually that's one of the purposes of why we want to see the detail in the construction bid is,
Okay.
they want material costs, labor costs, they want a description, which room they're going in. Pretty good details, so the appraiser, obviously needs that kind of information to really come up with an accurate after repair value for the
Yeah.
property.
Yeah, that makes sense.
One of the interesting aspects of the FHA, believe it or not, is you can actually go to 110% of the appraisal on the loan
Oh,
amount.
wow.
And, I don't know if we run into this, in the current marketplace. I think we could. Sometimes if you get an offer accepted on a property and the appraisal comes in under, in a conventional FHA loan, we could convert it to a 203K. The
Hmm.
minimum amount for construction portion of the loan is only $5,000.
Hmm.
I mean, that could be
Yeah.
a refrigerator, right?
Right.
So,
Yeah,
so,
absolutely.
so, that 10% could probably, on a $500,000 loan could get you up to 550.
Interesting.
So it's
Yeah.
an interesting opportunity, and this is why you savvy realtors, need to
Yeah.
understand that and be able to leverage it on those types of opportunities.
Definitely. I mean, it almost sounds like it could save a deal if the appraisal work.
Absolutely,
Yeah, absolutely.
that's my whole point.
I had never really considered that before, but I am going to keep that in mind for the next one.
Sure. So there's actually two flavors of these renovation loans, both from HUD and Fannie Mae. One of them is called the limited, and it's capped at $50,000. It's the process is easier to implement. It's really sort of targeted for finished improvements.
Hmm.
So you have a $50,000 budget to work with, and if you go into a property on a purchase, I think this is another good realtor opportunity for home buyers. I mean, you walk into a property that really just doesn't show well, lacks luster, really needs some renovation, and just sort of look at it as like, what do investors do when they flip properties? They
Right.
put in flooring, painting, maybe new windows, really go after the curb appeal and all of the interior improvements to really make the home
Yeah.
look attractive. And, I think we can get pretty far with the $50,000 budget. And
Definitely.
yeah,
Yeah.
so that's called a limited, and it's available both from HUD and Fannie Mae. The disbursements are different. They actually will release 50% of the funds initially,
Okay.
and then the contractor has to complete the project to receive the balance of the loan. But it's just another opportunity. I think it's an exciting way for a potential buyer that they now can go shopping for all those finished improvements. And I would love to buy a property that way.
Yeah, I was just thinking the same thing because especially if there's a limited inventory like we've been seeing
Yeah,
on the market, sometimes what's out there is things that need a little bit of help,
yeah.
and that really changes everything. If they were buying a home with this type of loan, does it change the timeline at all? Is it the same amount? Like, could they still close in 30 days?
That's really challenging, to be candid. And because think about it, we got to hire a contractor. And if I'm teaching realtors about these loans, I would get all of that queued up. Get the homeowner and the mindset that let's go find a fixer upper, and
Yeah,
get your contractor on board, and maybe even invite the contractor out there before you put a bid on the property,
right.
and just get that all queued up. You could sort of negotiate, your normal timelines, but just be prepared that we might need to move that out. Particularly, it's usually sort of stuck with the construction bid process, is
Yeah.
where sometimes we have to go back and forth. I mean, as you know, like in some purchases, sometimes you need to get a secondary inspection.
Hmm.
So plumber, electrician, HVAC guy needs to go out there, and that just sort of pushes that timeline. I mean, I would not box myself into a short escrow. Maybe keep it standard. Be prepared to ask for an extension if it looks like you're going to run into some delays.
It seems like this type of purchasing it this way would make the most sense, is to establish that relationship with a contractor who's readily available to give you those quotes and knows that this is what you're planning to do before you even start shopping for the home.
Yeah, yeah. I
Make
mean,
things go a little quicker.
yeah. I mean, I think as you're interviewing prospective buyers, that's like a concept you can introduce to them.
Mhm.
Some of them don't have the interests. Renovation projects delay time. You may not be able to occupy the property, right?
Right. Yeah.
And actually, we can build that issue into the loan,
I was
so
going to
we
ask you
can
that. I
we
was
can
gonna ask,
delay up to 6 months of your
oh,
mortgage payments. But we have
wow.
to we
Okay.
have to factor that in if we determine the property is not habitable during the construction period.
Well, that really changes everything too, because at least if they could stay where they currently live or rent something else and not be out of pocket for two monthly, payments of
Yep.
rent or mortgage at the same time, that makes a big difference.
Good.
So tell me, how you as the lender, how are you involved in the process from the beginning to the end of getting the loan, getting the property possibly, and getting the loan, getting the construction done, and then all the way to the end of the construction process?
Sure. This is really sort of a meaty question because this is really different than your conventional loans. I think first thing is the borrower highly recommend to sort of have a contractor on board as they start to look at properties, so they can start getting an early estimate on the construction bids. And if you almost think about that, they should almost have that bid before they actually make an offer on the property. But the lender's involvement is once the offer is accepted, home inspections are done. Um, the loan requires a construction bid, a detailed construction bid. It needs to be completed. There's also a HUD consultant that may be involved in the process. They need to review and approve the bids, making sure we're pulling out permits. The lender is relying on this field HUD consultant that the borrower hires to just validate the project. And again, make sure we're pulling permits, making sure that it's complete, making sure the rates are compliant or commensurate with the marketplace. Once that's been done, then it's just starts going through its normal loan process, and then the construction budget, once we close escrow, sits in an escrow account. And then we do fund control. So we close escrow, the loan's closed, the realtors are done, but that construction budget sits there that the contractor can pull from based off of the progression of the project until it's complete.
Hmm. Are there extra fees involved? Like, because it sounds like it's a lot more work for you as the lender involved in a
Yeah,
longer
so
process.
if we're doing a standard renovation loan versus the light, they have to hire a HUD consultant. That has a fee that actually can be built into the loan. And then there are going to be draw inspection fees. So that HUD consultant will go out after we close of escrow to do those draw disbursements to the contractor until the project's complete. So consulting fee, HUD consultant fees, and draw inspections. And a lot of that will be actually added into the loan. So it's not normally coming out of pocket to the borrower.
It's not something that we're not writing a check for it at closing, and it's part of their closing cost.
It's totally built into the loan. It'll be a line item for all of those fees into the loan.
Okay, so that makes it not so painful. Necessary and not so painful.
Yeah, I mean, they're paying for it. It's just not coming out of their pocket, and they're
Right.
not writing a direct check for it. It's built into the loan.
Right. Well, this has been extremely helpful. I've learned a lot more today with our conversation for sure. And
Good.
I'll definitely be able to help some people that I actually have some people in my mind right now who, their budgets aren't quite high enough to get into a home that's already finished. But with this type of loan, that actually might just stretch them just enough to get into something, which is great. I'm going to have to look into it a little bit more. So I'm going to put your information there at the bottom so people can see. They can give you a call if they're interested in one of these loans. Maybe they want to build an ADU on their property, which, you and I both think is the best financial decision somebody can really make. And we highly recommend it. So there is the Will's phone number, and you can give him a call, and I'll put his other contact information in the description, his email and everything like that. So be sure to check out our next video, because we're going to be talking more about loans in the future. And if you want more information about loans, I'm going to try to publish them on Mondays, and subscribe to the channel so you don't miss the next one. And thanks, Will, for joining me today, and see you in the next video.
Thank you, Maria. My pleasure. Look forward to talking to you and your customers.
Thank you.